Hello. Today I'd like to highlight the key judgments that we have just published in our September Emerging Markets Strategy Monthly. The title, Why We Are Facing a Perfect Storm in Emerging Markets. We've gotten a number of questions from our clients. Is it the right time to go back into the market? Has the market hit bottom? We're definitely in disagreement with those thoughts that the market is nearing a bottom and has a potential to turn up. Let me just highlight what we see coming. We've had a lot of upsets so far this year, particularly in Turkey and Argentina, but these haven't had systemic impact. What we see ahead of us is a potential perfect storm where we have seemingly unrelated developments happening at the same time that cumulatively could lead to systemic volatility. Let me just outline what they are. First and foremost, the US-China trade war. We expect President Trump to escalate tariffs on Chinese exports to the US later this week or perhaps soon thereafter, potentially reaching $400 billion in addition to what has already been introduced, about $50 billion. Our concern here is that tariffs to that extent would have a very significant impact on Chinese current account, and we would expect that if that happens, in that extreme case, we would see the Chinese current account in deficit. And if that's the case, our judgment is that the yuan could weaken another 15%. And that would clearly have spillover effects in Asia, but even globally. And that is likely to lead to systemic instability. Number two is Turkey. Everyone has gotten used to the fact that Turkey is heading for a hard landing, a recession. Our concern is that Turkey is heading for a financial crisis. And the reason is bad debts. And bad debts will lead lenders, particularly European banks, to cut off funding. So that is not yet in markets. So that's our number two, our second factor in the perfect storm. Number three is Brazil. Brazil, sitting there not far from Argentina, hasn't had the instability that we saw in Argentina. Our concern with the election coming up on the 7th of October is that we will not have a centrist candidate. We will likely have two extreme candidates on the left and on the right. And we think this could be positively disturbing for markets. So number three is Brazil. Number four is a point that we have highlighted in the past, which is simply that QE exit is going to lead to significant squeeze on global liquidity. Reversal of carry trades that have favored very much emerging markets. So within this context, with these four different developments, we see a perfect storm ahead for emerging markets. And the key here is that this is very likely to turn into events which substantially increase systemic risk for the emerging markets. We've lowered our risk call on emerging markets in May to negative and in June to strong negative. We continue that call this month, and our concern is that emerging markets can get worse before they get better. Thank you.